Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is a rainy Wednesday, the 19th of July 2017, and the trap that we're going to look at today is not quite there yet. We've got this level that's been touched several times. This is an hourly chart, the pound yen. I know we had some inflation data out the UK, but hasn't massively done a great deal, and prices, after the initial news, that is, and price has remained inside this broader area, which is a bit of a break in the trend. At the end of the day, the inflation rate is currently higher than the Bank of England's target, so while it was unexpected, the drop of 0.3 was still well above the target rate of inflation of 2%, and few feel that that drop will continue. So we'll see, but the initial drop certainly hasn't followed that the recent strength in sterling has evaporated. It doesn't look like that to me. So we've got this, basically we've got this area where price is trading in this range, and it's very primed, in my opinion, to be area on the chart where you may see a stop hunt and then a trend continuation. So there's that's where the stops will be, right, all below here. Anybody who was taking this trade in any of these areas on the chart, let me just highlight them one sec. So anyone who went long there, anyone who went long in here, anyone who went long in here, obviously at the hard right edge, they are playing a continuation of this previous move up down in here, and they're playing this level off this level, try and get in the trend, and that's perhaps not a smart move, as in like they may be selecting the trend direction. The problem is it's obvious, and what happens is when you have a trend, you never get the market going straight lines, even if it's the world's strongest trend. What you're gonna see at some point is you're gonna see the market take a bit of a rest, and that's just prime stop hunt territory. The market spikes below where the stops would reside, and then you get a trend continuation from there. So in many ways it fuels the continuation of the trend. Can't just all be one-sided going long. So that's essentially what I think could happen here, but the touches of the level are obviously more than the two that I drew on here. We've got you could definitely say that people went long in there thinking after that new high it would follow through. Where would you place your stop? Well, you do have that swing, but really you'd probably go below there because of the fact that you're going to have to go down in here for the next area. Most people won't want to do that, so there'll be some stops below here, and again, if you look at this and then you're looking to go along in this area, where you're going to place your stop, again it's going to be either just below the level, or you're probably going to go just below any structure at all, which was what those first traders did. Same again in there. So net there is a ton of liquidity sat stops in the form of liquidity in the form of stops, get there in a minute, and that's nicely building from there. And the reason why it builds, some people ask me the question, well, how come it builds? If people make money, imagine you go along here, place your stop below the level, and maybe you do trade it to the other side, and maybe you do exit, right? Fair enough. Then therefore your stop is not here on the return. That's absolutely true. However, that's presupposing that every single human doesn't have emotions and doesn't suffer from fear and greed. In the case of this trade, it would be greed. because they had all this money in the trades, right? And rather than exit, they were hoping for a breakout and a continuation of the trend. And as the price sort of moved away from the level, they're kind of thinking, maybe it'll follow through. Well, it looks as if it was going to. So now they hold, and then it fails again, and then the hold, and then it completely capitulates, and now we're back where we started, and it's bounced again. Now here's the thing: traders who went long in here, their stops are still residing at the level. They haven't potentially, well, maybe even they've come back in. It is possible they've taken another trade and added to that equation as well. But certainly there's a carryover, irrespective of people do add to the position. There's a carryover element to it. And then you've got the people who go long in here, the men and women who look at that and go, oh, well, maybe I missed this trade, maybe I missed this trade, I like this now, I'm going in here. There's an accumulation, and of course there'll be an accumulation from people holding that whole period as well from this initial trade. There will be fewer in here, because just think about the logic. Why would there be fewer carrying over to this point? Well, if you went long thinking it was going to break out and it didn't, right, and you end up back down in here, but you held, and then you end up back in that similar situation, there's a good chance you're going to bail, because you missed that first opportunity. You're probably going to be reluctant to miss the second one. There's a very good chance you exited, and when you exit, your stop exits with you, so there's no carryover to these other potential trade entries. However, that's more likely that it's going to happen the closer you are to price, so it's more likely you're going to get carryover at the touch prior to the current touch, etc., etc. And again, as I said, there could be people adding to positions as well. So that's the reason why there's an accumulation. That's the reasoning, the logic behind the fact that there's an accumulation. People are staying in those trades, and people are entering in those trades, and people are potentially adding to those trades. So there's an accumulation. So the stops on the when price actually goes through the level and it is a potential stop hunt, the stops that reside at that level are the most in quantity, right? It's just the logic has to follow. So this is, we're a bit slim pickings at the minute. It's a bit of a quiet day in news. There's very little going on. This is just sort of forward thinking that this could be a level. And whenever you're in a situation like this, you want a couple of decent levels. That first one's not so much of a great level, but certainly these last two have been great, and this final one just solidifies that whole thing. So you've really got three proper touches of a level that are very, very accurate, right? They're very, very clean. There's been no bastardization of the level at all. It's all very nice and very perfect. And those are just stop hunt heaven. So what you would anticipate, or what you should anticipate, or what might transpire. Obviously, none of this is 100% because we don't know the future. This could break and that's it. It never comes back. But when you do have a build-up of stops, what tends to happen is price will drop through the level and you'll get some type of failure to follow through, and then boom, you get your stop hunt, and then price then tends to break out to new highs. That's generally how it goes. And the stop hunt is facilitating the ability for big institutions to buy in the face of that selling, because the level here, when you go long, whenever you place a stop, that order is always counter to the order that you initially took. So if you're a buyer, your stop loss order is a sell order. Now, if you're a big institution, so let's say you're a bank over here or a hedge fund or whatever that wants to do some buying of this currency, then you want, that's a dreadful drawing, sorry about that. What you want is you want some selling to occur. So as price goes down through that level and fires off those stops that are sitting there, then that's sell orders, and you get to buy in the face of that selling, which is great news for you if you're the bank. Now, there are other things going on that seduce and induce more sellers in. This process, put your teeth in, Mark. This process can be more complex than that. When I say complex, I don't mean complex as in it's hard. I just mean complex as in it doesn't just necessarily have to pop through, trigger the stops, and then off to new highs it goes. There can be more to it. If you want to learn how to do that, if you want to learn how to know that and understand that order flow in its entirety, then today's our training weekly coaching call in my inner circle, my brand new inner circle. There's a link below this what's wrong with me? There's a link below this video. Click on it, come and join us. I'll see you on the inside.